Good morning. It's Thursday, December 10th. This is The Street Live. I'm Katherine Ross, and I'm joined by Jim Cramer. Jim, yesterday, the U.S. did surpass 3,000 deaths in a single day from COVID-19. And we saw the markets and pre-market trading under a little bit of pressure, especially with jobless claims, which we'll get to in a moment. But what are you watching in the markets?
Well, I'm watching DoorDash, which I didn't want to be up as high as it was. I was hoping it'd only be around 100. Reason I mention that is because I saw in my time when TheStreet.com opened well above where it should have, it caused tremendous disappointment as it went down. And I don't want disappointment. I think disappointment is something that is a toxin. You do not want people who are coming to this market playing around with things like market orders on a DoorDash or maybe Airbnb or something like the Greenwich Life Sciences presentation, which to me shows nothing new, and yet the stock has been, the stock's up 90. I mean, I just find that it's perilous when I see these kinds of things, and I like the market, but we have to have a little washout here.
Jim, according to FactSet, we were looking at expectations for jobless claims to come in today around 712,000. That was not the case. As we know, 853,000 jobless claims were reported. So what's your advice to investors as we continue to await a possible stimulus package?
Well, I mean, I just think you have to say the holdup might be that you need a Democratic president, and maybe that will cause Speaker Pelosi to relent a little. I mean, to me, the people of America need something right now. And even if it means making it so that the president gets a win, if that's what he thinks he's going to get, we need to have compromise because there's too many people who are unemployed and too many people who are hungry. That number today was very chilling. Don't want that to continue.
One vaccine candidate that you've been eyeing closely, Jim, and that's Johnson & Johnson. They did announce that they had to cut down the COVID-19 vaccine trial due to the prevalence of the virus. Now, I got to be honest, this was one component that I didn't even think about when it comes to these virus spikes. But because you candidate, Jim, this is a concern to you, especially with this theory of a vaccine.
Oh, no. I mean, when I dealt with them to try to get in the trial, the first time when I had just taken a steroid shot in my arm, my shoulder for a rotator cuff, there wasn't a lot of COVID in the New York area. And I joked with some of the people. I remember J&J didn't run it. They actually offloaded it to another company. But I joked with them that I could lead my life and never come in contact with it. So how do you know whether the placebo is working or whether it's the actual the vaccine? And they knew it. They knew that this was a crummy area to do the test because there wasn't enough COVID. Well, COVID took care of that, and now it's everywhere. And I know that there isn't, I'd say, minutes go by that I don't think about it. And I think that that's because it's just so prevalent. And that allowed us so J&J didn't have to worry about whether someone who had the placebo wasn't getting it either because there just wasn't any COVID around.
Well, and we do have some hope on the horizon with the Food and Drug Administration meeting today to pour over the trial data from the Pfizer and BioNTech vaccine candidate to decide whether it'll follow Canada and the United Kingdom in authorizing this vaccine. So what kind of market reaction do you expect to see if we get the FDA okay this vaccine?
At this point, I mean, it's pretty well known. I am upset with the FDA that I'm sure Pfizer actually goes up on this just because this market can be so dumb right now. But I think it's just really bad that Canada started doing it before we did. I mean, come on. Where's our FDA is not even taking into account the fact that 3,000 people died yesterday. I mean, this thing is you're taking 3,000 people a day. You're trying to a week is a lot of people. You got to be able to prove it as fast as the other guys. They're no better than we are. It's crazy.
Jim, at the top of the show, you pointed out market orders versus limited orders. And when I was watching Mad Money last night, that really stood out to me. So I want to take a step back and I want to ask you, let's break it down for investors. What is a limit order? When should you use it? And what is a market order? When should you use it?
Okay, well, I don't use market orders ever because I don't know whether the market's going to suddenly break down like it's one of the things about the flash crash made it so I never trust the market. I use a limit order that's a little bit above where the stock is, so I know I get it. that's not 10 times above. And then when I put in an order for an IPO, first of all, I don't like to buy an IPO unless I get some on the deal. I don't know who's getting some on the deal, but I tend not to like to buy a pop because pops can be unrewarding. I mean, if you bought the pop yesterday, then you had this big decline. I hope you bought some, and then it ramped right back, and that was lucky. But a market order, when you're at the mercy of a syndicate desk that doesn't have any stock to release, or you're at the mercy of other investors who are willing to pay any price, no. And that's what people did. They paid any price. Now, I happen to love the company DoorDash. I was willing to say it was worth $100. I mean, I said it. That was very, very aggressive to say that the company is worth around $25 billion. I mean, it loses a lot of money. It may have an ecosystem for delivery, but delivery is something that you can, if you have your own people, you can cut out. It really was not anything proprietary to speak of. Others have been doing it. Grubhub did it. Postmates was doing it. These have been bought. But I just feel like that. What the heck has happened here? This thing is going, and I fear that's going to happen to Airbnb too. But this thing went to a level that was so uncomfortable for me that I actually did a thing about Jenga and DoorDash last night, basically saying that this was the Jenga piece of wood that took the whole thing down.
Well, what does this make you think about Airbnb? I mean, this stock, we're looking at indications of 155, I believe.
I like Brian Chesky very much, and I'm willing to buy Airbnb at a certain multiple. I mean, to me, we've done pieces. We think it's worth about, I don't know, half about where it's going to open, and we love it. See, that's the problem, Catherine. We are being very aggressive on Mad Money with our price targets, and yet people think they're ridiculous, but they're very aggressive, and we just don't want to risk. Now, one of the things that's happened during this period, people are optimistic, and that's great. It's certainly been right too, but I don't want people to suspend all valuation and think, you know what, stocks don't go down, because stocks do go down, and I don't want people to be hurt. Now, someone can say, Jim, you kept me out of DoorDash. I'm willing to do that. I'm willing to say that I didn't like it. Did I keep you out of it? You know what, people, it's your own money. But I know that it's too high for my taste. And again, I stress, one, I like it, and two, the valuation I put on it is very stretched. These are not stretched valuations. They're nuts.
They're almost improbable to figure out before you see these indications. I mean, it's seeing $155 from a $68 pricing is pretty incredible. Jim, you spoke to CEO Brian Chesky of Airbnb this morning.
Yes.
And I wanted to ask, what was your biggest...
for a long time. He's a very good man.
What did you take away from that interview, and what kind of feedback would you give investors who are looking to get into Airbnb at whatever price they can today?
Well, look, I mean, I think that Airbnb is an amazing company, and it can grow into its market cap. It won the category. DoorDash has not won the category. There is really no other way. There's periodically Vrbo, but the Airbnb is part of the firmament. It's what you use to rent a longer stay place, a house. People aren't going to necessarily go back to hotels. It's really hurt the hotel business permanently. The value is there. So, I mean, my takeaway is that it could open very, very high, but one day might be worth that. And I don't feel as certain about a 13 times sales DoorDash because it's not as proprietary. So I'm going to look at Airbnb and try to make a judgment about whether on, say, 2025 earnings, it could be there or sales in the same way that I certainly was willing to recommend Amazon for a long time, recommend Tesla, and recommend NVIDIA. So it's not like I'm against recommending really expensive stock. I just want the risk reward to be good.
Well, let's talk about one of those stocks that not only drove the market, but one that you've been recommending, and that's Tesla. So right now it's kind of cooling off as Airbnb and these other IPOs such as Dash heat up. So, Jim, what's happening right now?
Well, I mean, I think Tesla is biding its time, this S&P inclusion. But what people have to recognize is that a lot of investors got involved in hitting the stock up A lot of investors got involved in the stock market because of Tesla. And Tesla made you feel like that you're invulnerable if you buy. I like Tesla. I think it's a great company. I do think that it can be worth one day what it's selling for now. But I am adamant that Tesla needs to keep going up if we're going to maintain these valuations, because Tesla's kind of like the treasury. You know, you make everything based on the tenure. And that's what, you know, this is the benchmark for stocks. And so it's got to keep going higher.
Jim, the FTC and a coalition of attorneys generals have come together to file 2 antitrust lawsuits against Facebook, and they're also talking about divesting Instagram and WhatsApp. If this were to be successful, what happens to Facebook, and how should investors approach the news?
It's almost impossible to see that it could be successful. The arguments are so poorly reasoned, it's kind of frightening. You know, it's this notion that a company that sees something that might be better than what it could do buys that company, and I don't know when that became illegal. It is tortured. The logic of it is tortured. And I truly believe that it's just a colossal mistake by the government, and it will be thrown out.
Jim, give me a sneak peek of what I can expect from you and Bill Enright during Bull Market Fantasy today at 4 p.m.
Well, you know, it's back to Thursday Night Football. We have to talk about what went on in Philadelphia. That means a lot to me. And this is the first week of the playoffs, and I think that those who now I lost 12 of my 17 players. So this year's the first year I didn't make the playoffs, and it's been very painful. I want to talk about that too. But there's guys on your roster who are valuable and guys who aren't, and we're going to raise some questions about the guys who are valuable that you don't think so. So it'll be kind of cool.
All right, and with that, we are now heading over to our Action Alerts Plus members-only daily show over on actionalertsplus.com. Come join us over there. I'm Catherine Ross. We'll see you tomorrow.